Good afternoon, everybody. Phil Simons with Columbia Grain here in your Friday afternoon weekly grain market recap. Well, we're going to go ahead and dive right into it as we do have another week in the books, but we did have a lot of fresh fundamental data this week as we did have the May WASDE report released on Monday. So I'm going to go ahead and share my screen with you again, and we're going to navigate over to our favorite website, columbiagrain.com. And in the upper right-hand corner, we're going to go to the Producer Solutions tab, which again is where we house all of our pertinent data that could be potentially driving the markets here. But this week on Monday, we did have the latest May World Agriculture Supply and Demand Estimate report from the USDA. And May was it's actually a pretty important report as it does give us the first official blush in terms of what the USDA is anticipating for the balance sheets for new crop going forward. So let's go ahead and take a look at that. We did have the old crop balance sheets, but again, the majority of the attention was really focused on new crop balance sheets being the 25-26 crop year. But the bulk of the numbers here, when we look at corn, soybeans, and wheat, really comparing them to where we were last year at this time in terms of our ending stocks in the U.S. And again, this is the first initial blush from the USDA. So there's going to be a lot of changes going forward, a lot of weather dependent situations as well. So again, this is just going to be the first blush in terms of what we're actually seeing here. But on Monday, the USDA, they did release the ending stocks for 25-26 for corn to actually be at 1.8 billion bushels, which when you compare that to last year's number of 1.415 billion bushels, it's actually a 27% increase. So on Monday, we actually did see a little bit of a reaction in the futures markets as a result of this. But it is interesting to note that the 1.8 billion is actually significantly below where the average trade guess had them coming in pre-report, which was just over 2 billion bushels. So there's a lot of chatter about these numbers, and again, a lot of weather that we're going to continue to build into these markets as we move forward through the planting season and into the growing season. On the opposite side of that, when we look at soybeans, we actually had the numbers come in at 295 million bushels for the potential ending stocks, which would compare that to last year is actually a 16% decline year over year for U.S. ending stocks of soybeans. So again, we did see soybeans actually take a little bit of a boost up right after that report. But week on week, we're going to take a look and see what the actual changes were when the dust settled here in a little bit. And same thing with wheat as it was with corn. We actually did see about a close to a 10% increase when we look at it year on year in comparison to the first initial glance from the USDA coming in at 923 million bushels compared to last year's number of 841 million bushels. And kind of a double whammy there, you did have the average trade guess coming in at 857 million bushels. So it was a little bit of a surprise to see, that much of an increase in the potential ending stocks for all U.S. wheat going forward into new crop here. The other thing that we were really trying to focus in on was the potential U.S. winter wheat production as well in this last report. Then you can kind of see, again, how the breakdown by class from hard red winter wheat is coming in at potentially 784 million bushels. Again, when the average trade estimate had it coming in at 748 million bushels. So about a 2% increase there. Soft red really, up marginally, about a 1% increase, and on white wheat coming in at pretty much where it was last year and pretty close to the average trade estimate as well. So again, just something to continue to monitor as we go forward. But then again, the weather maps are going to have a significant impact on what we see going forward here. But when you look at the old crop balance sheets, and again, when you compare it to new crop as well, old crop balance sheets 24-25 for corn, we actually did see a 50 million bushel decrease month on month. So again, that does move forward into our new crop carryout. Having the impact from today's report or from Monday's report at 1.415 billion bushels to next year, seeing just a significant increase there. And again, it's just the first initial blush of what new crop could potentially be for ending stocks for corn. And same thing on soybeans again, but just the opposite really. When you really look and see where the carryout is currently versus where we could potentially be going out to next year's crop. Again, when you do a month-on-month comparison from old crop, we actually did see a 25 million bushel reduction in the U.S. carryout stocks for this last marketing year. But again, when we look at the decrease that we're potentially going to see for U.S. soybeans here, it doesn't leave a whole heck of a lot of margin for error going forward here. And same thing on wheat. In all reality, there really wasn't much of a change in old crop wheats. Again, it was really more of a focus on the new crop and the potential production there. And when we look and see what the overall wheat, by class, and again, the production, we do see that the carryout number this year is potentially going to be 841 million bushels. So again, when you increase it as much as we're potentially looking at it, we did see the markets really get fairly defensive. And from the wheat class standpoint, we've continued to really grind out the lower end of the range in terms of where the futures have been trading for new crop. If we look at the September futures contract month, we really did, create fresh contract lows just about every day this week. But then we did get to the more psychological, support level of September was down at close to $5 in Kansas and in Chicago. And we did see the markets kind of bounce off of that as more of a, really a short covering rally as opposed to anything else, just from where the funds or the managed money position has been, continuing to sell futures, as they were anticipating to see a build in U.S. carryouts going forward. And they were right, and they've been rewarded being in a short futures position. But again, at some point in time, they do need to look at it and say, when do I want to start actually turning these paper profits into real profits and turning it into the bank? And we did see a little bit of that here this week. But then again, today, when we closed everything out, we did kind of revert back a little bit and give some of those gains back today. But when the dust settled here today, when we are looking at new crop contracts, new crop opportunities, and again, just the price action, we did see that December 25 corn overall had a weekly range of 15 cents. We actually lost 9 cents week on week. Again, today we did see the majority of that loss kind of get solidified here today. When we look at new crop beans, looking at NOVA 25 beans, we actually had a 35-cent range there. But when the dust settled here today, we were actually only down 5 cents week on week. So again, a lot of uncertainty in terms of what the weather could potentially bring, and a lot of geopolitical, influence as well. That's really kind of, putting a bunch of question marks on the potential demand going forward for new crop beans as well. But when you turn the page and you look at the wheat complex, again, we had some pretty decent ranges there. Average 25 to 30 cents in the overall weekly ranges. But you can see that Kansas actually had a 29-cent weekly range, but wound the week up with a net loss of 5 cents. And in Chicago, we had a weekly range of 26 cents, and week on week, we're actually only down 2 cents. So we actually did, pare back a lot of the losses that we were looking at earlier, kind of midweek there. But when you look at Minneapolis, we actually had a 23-cent weekly range. We actually had a weekly net change of down 24 cents week on week, and actually closed, closer to the lower end of the range over in Minneapolis. So it was a little bit of a mixed bag there, from the wheat complex as well. But other than that, I mean, really what we need to continue to look at here is where are our pricing opportunities? Where do we want to have our good till cancel orders out there? And what types of tools do we want to look at? Every marketing year is definitely going to be different than the last one. And this year is definitely shaping up to be much different than what we've seen right over the last few years in terms of just where the overall futures prices are, or where they have been. And, the last couple of years, really utilizing the hedge to arrive tools or the accumulator contracts has been a fantastic way to add, some potential premium to your cash contract when everything is said and done. This year, when we do look at the opportunities and the different marketing options and alternatives, looking at basis contracts may be the thing to look at this year, just because we are, it does feel like we're kind of grinding out the lower end of the range, from a futures perspective, primarily in the wheat complex, maybe not so much in the corn complex just yet, but in the wheat complex, it does look like we are, going to continue to kind of grind out at these lower type futures prices. So maybe looking at a basis contract would be the marketing tool to look at this year. But other than that, we're going to go ahead and wrap everything up for the week here. Oh, the other thing that we did have on the week was the Wheat Quality Council did their Kansas wheat tour. And when everything was said and done, they were coming up with a potential yield of 53 bushel to the acre for the Kansas crop. There was a lot of chatter on this wheat streak or mosaic disease in some of the area, mostly the northern area. And again, you can really see that in where the crop progress or the quality conditions reports that have been coming out on Monday as well. So again, that's not going to be really anything that we see what the true ramifications could potentially be to yield or test weight until you actually get into harvest. So again, it's just going to be something that's going to continue to be on everybody's mind as we move forward and closer to harvest. But other than that, we are going to go ahead and wrap everything up for the week here. I hope everybody has a great weekend. And remember, when the plate of cookies goes around the table, be sure to grab a couple. Have a great weekend, everybody. We'll talk with you next week.